given the uncertainties that we're facing right now, what can people be doing affirmatively to take advantage of sort of the situation we're in?
One interesting thing is, even though the estate tax situation has sort of been, put off for a year, and coming back again in 2011, the gift tax setup has remained the same. So we still have the same $1 million exemption that we had before, and anything else is subject to gift tax. One of the only differences is that the tax rate has gone down from 45% to 35%. But a subtle thing that we might be able to take advantage of is, as we said before, the generation skipping tax, this extra tax if we try to get dollars down from parent level and bypass children and go directly to grandchildren. In that situation, the generation skipping has been abolished for both estate tax purposes and gift tax purposes. So there are opportunities now out there to get dollars to grandchildren at much cheaper cost. Let's just say I wanted to try to get $1 million down. I'm a grandparent, and I wanted to transfer $1 million down to my grandchildren. Under the old law, what would happen is we would be subject to a 45% gift tax, a 45% extra generation skipping tax to get it down to the grandchildren level. And believe it or not, the government had something in the law that said you had to pay an extra 45% generation skipping tax, gift tax on the generation skipping taxes that you paid. So in order to get $1 million down to a grandchild under the old law, it would cost you $1.1 million to extra taxes just to achieve that.
So it would cost you more than the actual gift to make the gift itself.
Absolutely.
And all the taxes that layered on top of that.
Right.
But where rates are now, and with the elimination of the generation skipping tax on gifts, it sounds like a pretty significant opportunity to get a taxable gift down.
Yeah, it really is. Now it would only cost me $350,000, just the 35% times the million, to get money down to a grandchild. Now, the caution here would be, remember, we said that we have no idea whether the government is going to pass something to make any new law retroactive to the beginning of the year. So what we're doing with our clients in a lot of situations is we're sitting down, we're reviewing plans, and we're seeing, if this law stays in effect in 2010 and we just have the 35% tax to get money down many generations, maybe we sort of tee up a plan and we put together something that makes sense for the clients. I have a trust that I would set up that would go down to grandchildren, last a long time, and all of that. And it could be a significant gift. But what we do is we could set up all the paperwork and maybe sort of wait towards the end of the year, because maybe then we'll have a better idea if the new law is going to be retroactive or not. So there are opportunities and possibilities like that that we should be thinking about. And there are also existing trusts out there that, have possibilities of getting money down to grandchildren as well. And we should be taking a look at that too. Because we could have trusts where otherwise distributions out of these trusts would have triggered an add-on generation skipping tax where today there isn't. And these also. Best thing probably to do at this point, if you want to be cautious, is just to sort of identify the situations and then wait to see where we're going to be potentially with the law, and then maybe act when we have a little bit more sense of certainty.